I think this just maybe underlines how important it is
Mhm.
to save small amounts over time
Mhm.
because the more that you're building over time, the more you're earning a great APY. That's going to protect you against the effects of inflation.
We are so excited to have you. We've got a ton of questions for you all around APY. We hear it, we see it on the internet, we see it on a commercial, we see it on a billboard. What is it and what does it mean?
I think it's a great question. So, three little letters that are so important to the savings and the interest that you're earning. Annual percentage yield and interest rate are closely related. So I'm going to talk about both of them, but they're slightly different.
Okay.
So I'm going to start with interest rate because that's really the base rate that you're going to earn by putting your money in a savings account.
Mhm.
Annual percentage yield, or APY, that is the real amount you'll earn on an annual basis, so over the course of a year. So really that takes into effect compounding. So it's your money earning money. So it's a really, really powerful number.
I like the sound of that.
Yes. And that's going to get you closer to your goals. It's going to get you closer to building up your emergency savings reserves. So APY also, it's a rate. It's going to help you compare savings account to savings account using an apples to apples way to think about, how much you're making. So really, really important.
Yeah. And we hear these buzzwords so much. So really helpful breakdown just to understand the difference between the two and then what it means for me and my wallet. You mentioned the concept of compounding. Can you explain it a little more? Maybe even give us an example just so when we hear that, when we think about it, how should we think about compounding and the effect it could have on our savings?
Yes, I am so glad that you brought us back to this. Compounding is an incredibly important word when you think about how your money makes money. And so what I mean by that is as you get interest payments into your account, the interest payments become a part of your balance. That's your money. And then you are earning interest on the interest that you've already been paid. And it doesn't sound like it would have a big effect, but it really does. And it has a larger effect over time. So let me go into an example. You have $10,000. Your savings account is paying 5% annual percentage yield, or APY. At the end of year one, you'll have $10,500. So that's over $500 in interest alone.
Sounds like a plane ticket to a vacation or a nice dinner somewhere I haven't been before. So that sounds good to me.
Yes, and that's just an interest payment.
Mhm.
So fast forward, year two, you leave your money there. You don't think about it because it's emergency savings. The end of year two, you're going to have a little over $11,000. And so this really, and it'll just keep going. Compounding effect keeps on accelerating, keeps on getting bigger, even if you don't continue to contribute to savings. So compounding, as the name might suggest, has a really important impact on how much your savings are earning.
Incredible to hear, too. That's without even adding anything that new and just the year over year with interest. So really helpful example. Thanks for walking us through it.
Of course. And I will also say, that's why APY is so important because many banks, many institutions don't pay a lot. So keep in mind APY and the effect of compounding.
Yeah, that's with not putting anything additional than that $10,000 you put in the beginning. So that just shows the power of compounding and what it can look like. So really, really helpful example. Kind of hoping we can play a little bit of a game now. I can throw out a few scenarios. We'll call this worth it or waste it. Few scenarios, type of account, savings habit, money move, and you'll tell me if it's worth it, smart move to help my money grow, meh, take it or leave it, or waste it. My money deserves better. You want to play?
Can't wait.
Scenario 1, a traditional savings account with 0.01 APY that hasn't changed in 5 years. Waste it.
Yes.
Why?
So you're making pennies on the dollar in terms of interest. The APY, or the annual percentage yield that you're earning on your savings, is so important. And unfortunately, I wish I could say that this is uncommon, that you would be earning, 1.01%, but it isn't. It's really common. And so make sure that you check, make sure your savings are getting the returns that they deserve. But yes, waste it.
A high yield savings account offering 4.5% APY with no fees or minimums. Worth it.
Yes.
Why is it worth it?
4.5% or a higher overall APY that you can compare against other places to put your money, it's a good deal.
Using a CD or certificate of deposit with a 3% APY for 12 months. Meh.
Yeah. And by the way, so you said it, certificate of deposit, but generally this means that you have to be comfortable locking your money away and not withdrawing it or accessing it for however long the CD is. So 12 months, make sure you feel comfortable with that. I'm a meh on the APY. So today, that's not so great. But in general, just keep an eye on both how much money you need, what the APY is on the account, and how much access you think you're going to require.
Really helpful to hear about certificate of deposit. APY, same thing. Billboards, commercials, TV. We see these acronyms everywhere. And so just to even break down what a certificate of deposit is a little bit there was really helpful. So thank you. Choosing a savings account just because it's at the same bank as your checking account. Meh.
Yeah, for this one, so I would say just make sure that you're making the decision that's right for you and that you're getting the yield or the APY that you deserve. So if it's emergency savings and you're making what you think is an easy, convenient choice, but again, you're getting paid 0.01%, it's not a great decision. So don't do it just because it's convenient. Think about where your savings is and how much you're earning on it.
All right, and to round us out, saving $20 a month automatically, even if it's small.
So on this one,
worth it.
Yes, absolutely worth it. And my advice would be take the approach of paying yourself first. So even if it's a small amount, $20 a month, and you can do it and you won't feel like it's inhibiting the way you want to live, that's going to be better long-term in terms of building habits that ultimately are going to take you to better places in terms of your savings.
It's helpful to hear that kind of like pay yourself first too, because though in the moment it doesn't feel like maybe you're making the most big impact that you can with something small, over time it really adds up and makes a huge difference.
Yeah, it really does.
Another kind of complicated topic, at least in my eyes, I get very intimidated by this, is inflation. How does inflation affect a saving strategy? How should we think about it? And what should we do about inflation when we think about savings?
I think it's such a great question. And unfortunately, I think we've all been thinking a little bit more about inflation recently. So I'm glad you asked. Inflation obviously means that over time, your money is worth less. Really, really important when we think about how we're saving, because really less purchasing power means that you really need to make sure that you're earning a good APY on your savings to make up for that. And it was funny, I was just reading the other day in a study that we did here at Vanguard, inflation is actually causing over 40% of people to think about their saving strategies broadly. So like,
wow,
how are they saving money? How are they setting money aside? Where are they choosing to put their money?
So I'm not alone in the inflation considerations and what should I do about it?
No, you are absolutely not. And I think this just maybe underlines how important it is to save small amounts over time that you don't find painful or onerous, because the more that you're building over time, the more you're earning a great APY, that's going to protect you against the effects of inflation.
Tons of great information today. Thank you so much for all of the complexities that you broke down for us. What are some key takeaways that you want our audience to remember about APY and just maximizing our savings?
Of course, I could talk about APY all day. So 3 things to keep in mind. Number 1, make sure you understand the difference between some of the concepts we've talked about today, because they're really important, even if they seem a little overwhelming. So annual percentage yield or APY, sometimes it's referred to as rate. You have interest rate, and then you have compounding. They seem really dry, but they are really, really important to maximizing your savings, which is going to get you closer to the things that matter to you. Number 2, make sure that you're picking the right place for you to put your savings. So considering all those things, make sure that you're not just putting your money in a place that's convenient for you because you haven't really spent some time thinking about it. Taking into consideration your yield, how much access you need to your money, all these things are really, really important. And then number 3, make sure that you continue to contribute to your savings even if it's in small amounts. So small amounts over time, better than a large amount, once in a while that's super painful for you, that's going to cause you to stop doing that. So these three things together can create a really powerful and long-lasting savings strategy that's going to help you get closer to what you want to use your savings for.
That and our newfound knowledge of APY, inflation, and interest rates galore. Thank you for being here. It was great to have you and appreciate all of the helpful information.
Thank you so much for having me.
And thank you to everyone for joining us. If you have any questions or want to learn more about APY and other financial topics, be sure to check out our website and follow us on social media. Until next time, stay savvy with your savings.